we go. The recording wasn't working then, excuse me. We did this a couple of months ago, and I've got a little twist on it today. So hopefully we'll have a good session today. So as usual, any questions, please put them in the question box, and we'll crack on as we go forward. So before I get going, this material is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in Forex and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without our prior written permission. Okay, so this is me. I'm one of the analysts here at Hot Forex. Those of you that don't know me, I've been trading my own money since 1997. I worked in the City of London for the best part of 20 years, and my approach to trading is distilled into 4 words. I say this every webinar, but it's because things haven't changed. Basically, I do what's probable. I keep it simple. I look at multiple time frames, but most importantly, I know myself. I know what sort of person I am. I know what sort of time frames work best for me. I know that I lose a lot. But it's just part of the business, and if you keep your risk management and money management tight and secure, you can keep going forward in this crazy business of trading. So anyway, that's enough about me. Today we're going to go through the EMA strategy again. I'm going to show you how to set it up. It's very straightforward. It works effectively on the 1 hour and the 4 hour systems. Obviously it doesn't work all the time. Nothing works all the time, and don't expect any system to work all the time. If somebody tells you I've got a system that works 98% of the time, 95% of the time, or even 85% of the time, take it with a big pinch of salt, because there will be something that trips you up in the long run. So just don't overcomplicate things either. That's what I find. It's all about finding entries. It's very simple, and it's all about trend. I'm a trend trader. My own cash is risked at on the higher time frames, the daily time frames. This system works quite well on daily time frames as well, and it really is all about trend. But just remember, markets trend about 30-40% of the time, most of the time. A lot of the Forex markets at the moment and the commodities markets are in strong trends, so that's all well and good for now, but that isn't going to last forever, and it never does. So it's all about trends for me. Stop loss and take profit, absolutely vital. It's all about limiting your losses when you do lose, cutting those losing trades, and accepting that it happens quite a lot. But today we're going to look at changing the targets, or how we let the targets run, or let the trade run, and move our targets as the trade unwinds, as the trend unwinds. Bit on risk management, obviously, and any questions you've got. So those of you who were here at the first session, I'm going to go through that again briefly, and then we'll touch on the twist I've got on it, and you can see it's really how you manage your this usual thing about managing fear and greed, and stop loss and take profit take a lot of that emotional side of the trading out of it for you. So I won't stop on that. So basically, this is setting up the chart, and there's again there should be a chart picture on there. Well, it was disappeared. So apologies about that, but anyway, this is in words how to set up the charts, or this EMA strategy that works on these intraday time frames. So basically, I use and we'll go through the charts in a minute, but basically we use the exponential moving averages. I use the 5, the 9, and the 20. Okay, so just bear with me for a second until we bring the charts up, those of you who have not seen this before. It also has the Bollinger Bands on there, set at the standard 20, and the deviation set is 2.5. It doesn't really matter if that's 2 or 2.5, it really doesn't matter. The RSI just is the simple oscillator that I use, and the ATR is the key thing I use for typically setting targets, certainly in the lower time frame, so that's quite a strict one, and we're going to see a bit of a twist on that today. So the entry rules are basically Two things need to happen before we either take a long trade or a short trade, depending on what's happening, if the trend is forming. So we need the EMA, the exponential moving averages, to cross. So we need the 5 and the 9 EMA to cross. So if the 5 crosses from below, it's suggesting a long trade. If the 5 crosses from above, so it crosses from above to under the 9, it's suggesting a short trade. So that's the first rule. But the second rule has to trigger before we actually take the trade. And the second rule is we need to break the midpoint, the midline of the Bollinger Band, which happens to be the 20-period moving average. It's a simple moving average, but it doesn't really matter. It's a, I should say SMA, not, but it's the midline of the Bollinger Band. That's what you're looking for. So you're looking for these two things to happen. You're looking for the 5 and the 9, this 5 and 9 EMA to cross, and then the second line, the midline of the Bollinger Band to break. Don't worry if this doesn't make any sense. We'll bring the charts up in a minute when I run through the slides. Okay, so we enter at the close. After this has happened, if this break, we wait for the whatever time frame we're trading, whether it's the 4 hour or the 1 hour or even the 30-minute chart time, or the daily time frame. I would say it works quite well on the daily time frame as well. To wait till that time frame has completed. Okay. So we wait that time's come from play. If this is still in place, if we're still above the midpoint of the Bollinger Band, and this cross is obviously has happened, we then take the entry. Okay. Now the standard setting is a target of whatever the ATR is at that time. So if this candle closed at whatever we are, say at 2 o'clock, say this candle's just triggered now at 2 o'clock, we drop down to our chart, our ATR chart, see what the ATR is at the time. It's 10 pips, 15 pips, or whatever it is, and that becomes our target from the entry point of the close of that candle. Okay, the stop loss should be ideally below the turn in the market, where the market's actually turned. So it needs to be above or below, depending on whether we're going long or short. It has to be where it has to be, the turn in the market. And one of the big criticisms of this approach is that sometimes the risk-reward ratio is less than 1, and I accept that. As I say many times, I'm not saying use this system, but I'm saying this works quite effectively for me. So the issue being that if the risk-reward ratio is so small, logic would say to us, well, if it's less than 1, we're risking more than we're looking to gain. Over time, we'll end up losing money. That's logic, isn't it? However, in the real world of trading, that doesn't occur as far as my trading records show. So what we're looking to do is go with the trend, go with the momentum. And so the reason that this can be quite an effective system, although the risk-reward ratio isn't great, is the fact that we're above 3 key moving average. We're above the 5, we're above the 9, and we're above the 20, or we're below the 5, the 9, and the 20 if we're going short. So therefore, momentum is with us. And the ATR, the average true range for the last 14 periods for this particular asset, wherever we're trading, is whatever. It is much more likely to be hit. The probability of it being hit is quite high, simply because we're above these other 3 moving averages as well. Okay, now that's the theory. Now it sounds very dry, and we're just looking at this blank chart, but when this blank slide. But when we actually see the charts, you'll see. Hopefully, you'll see what I mean. Okay, so it's all about the ATR being the 100% of the ATR, or the ATR being the target. Okay, what we're going to look at later on is if that's too small for you, or this risk-reward idea looks a bit too scary for you, how about just letting it run, let the market run? And that's what I'm going to show you later on. Some of the other slides where instead of setting the target at the ATR, just either set it at the next another break of one of the moving averages we're using, or another resistance level, or another support level. And we'll see that on the charts when we set the charts up. You see all these other things coming in to play as well. So all I'm saying is that this system was developed with the ATR as a standard target, in and out quickly on the 1 hour time frame. I've expanded it to the higher time frames and the lower time frames, but we get the targets to run a bit further, and we'll see that when we bring some charts up in a minute. Okay, so this is it in action. Very simply, This is a long. What's this? This is a long trade. So the 1, 2, 3, 6, 1, 2, 3, 4, 5, 6 things here on this chart. So the first two things we need to have: the 5 crosses the 9 from below, so we're going long. So here we've got the blue line here crossing above the red line. This is the 5 EMA crossing above the blue. Sorry, the blue line crossing above the red 9 period EMA. During this hour here. Second rule, we broke the midline of the Bollinger Band, so we've been going down. On the completion of this candle, we broke the midpoint of the Bollinger Band, so that was our entry there at the end of this candle, and this candle closed here. So number 3 was our entry at 1.2205. So we've entered here. What's the ATR at that time? Well, the ATR at that time was 8 pips. ATR down here, it was 8 pips. So 8 pips from here at 122.05 takes us to 122.13. You know, some people say, oh, it's only 8 pips, but you know, this works quite effectively. So 8 pips is 8 pips. So the target was 8 pips. The stop loss, this is a good example of why I'm saying that the risk reward is poor on from this system, because we've been coming all the way down. The turn in the market, the comfortable turn was all the way back down here at 121.88, where this, you know, market didn't look like it was wanting to move. So we spent 1, 2, 3, 4, 5, 6 hours not going any lower than that. So that's quite a safe stop loss area. And also the other confirmation, the other thing that you can see here is the size of this candle, because candle size is quite important as well. So this system can trigger a lot of the time, but the candles sometimes aren't big, and again we'll see that when we go through some of the live charts. What you're looking for, the added thing you want to look for, it's not part of the rules of the system, is a nice big candle as well. So you see how small these candles have been previously, and this big candle here engulfs all this previous action and takes it long. So the probability of actually just getting another 8 pips out of this move again is quite high because of this big candle here. So candle size is important. So remember, the bigger the candle, the more significant it is. And same with wicks on candles, but more on that in a different webinar. But big candles are quite significant, and they jump out quite often on this system as well, especially at the opening of the European session and the opening of the US session. So the opening of the two key forex sessions of the 24-hour trading day can be quite significant as well, and it works very well around those times as well. So they're the hours to watch, you know, 8 till 9, 10 o'clock sort of time, server time, and then later on 3 o'clock time as well. So that's a long trade. This is I won't go through this one as well. This is a short position, and this was on whatever this was, but again, a similar thing. We've had a cross of the moving average here. This one, the blue, has come under the yellow. The 5's come on. 5 crosses from above and underneath the 9. It's blue and yellow on this one. We'll come to the settings in a minute. And then we close under the green line. This one was entered here at 9 o'clock. It triggered really here, but it's a manual system, so I didn't actually enter that particular trade until there at that point. And then it's run down. ATR at that time is whatever it was, 2.25, and it's run down from 13.32.30 to 13.30. Taken a little while this one to run out, but again, it's all about patience, all about letting the trend run. As you can see, that's extended, so it's got through to its ATR. And the stop loss again was back up here above this turn here. It should have been a wee bit higher actually than that on that particular example, because the turn was clearly there, discounting those 2 candles up there. So it's a very simple system to set up, and as I say, it works. The 2 we've just looked at there are on 1 hour time frames, but it works effectively on 4 hour. I haven't really back tested it on anything below about 30 minutes, but it works quite well on 30-minute charts as well. So that's a very simple setup. That's just an example of one I was teaching this when we were away in Lagos in Nigeria, and it actually triggered live this one at 6 o'clock. So we were just finishing the day we've been talking about, and it triggered at the close of the 5 o'clock candle there. And as you can see, same thing, we've been moving down, stop loss is under there, it triggered, the yellow went above the blue, We've entered here as it's broken up. It's a fairly decent sized candle, similar to the other size, but it's enough to trigger in. ATR was whatever it was, and off we ran, and then it kept going, but that was a short one. We were in and out of that one. And one of the things I'm going to look at today is, people say to me, well, what about missing all this? Well, there's two ways of approaching this. If this trend runs out, you can then, so that was the first entry there at 6 o'clock. So by here, if you've been watching this, sort of, it didn't get to there, did it? So during this hour, it's spiked through there. So two different types of continuing this trend. Do you want to re-enter again at this hour, having seen 3, 4, 5 hours up? Well, yes, because everything's still with you. The moving averages are still nicely aligned. We're above the 5, the 9, and the 20, so it's still positive. We're above this previous high here when we close, so take it, yes. So off you go. So again, with this one, you would have taken whatever the ATR was there. This is following the rules again. Would have taken to us about here. What the twist is, I'm going to show you later, is instead of doing that, you use the moving average you've used to get in to also to get out. So here we've triggered here. So this is crossed. So we're using the 3 moving averages. Remember, we're using the 5 and the 9 to cross, and the 20. So what you could do is use the mid one, so the 9, as your getting out. So if you'd got in here on this cross here, instead of using the ATR as the target, if you want to think this is going to run, I mean, this is a good example because it's happened, it's had a big move up. You keep long in the position until the mid moving average, the 9, is breached. So you would have got in here at this one, and we didn't close underneath the blue line, the 20, until up here. So we'd have got all of that sort of move on this one. Okay, different ways of doing it, and as I say, other traders and other ways of doing it will say, well, the 200 period is going to get hit at some point, so I'll have my target just below the 200 period because this looks like it's going to run. Okay, so that's what you might have done if you'd seen this next big candle here, because we've had a big move up here. That's our one target. We'd have entered again there, following the rules. If we're using the standard rule 1, then we would have hit there, and then you would think, well, where's the next target going to be? Well, it could be this 200 period up here. So that would have perhaps been your next out, and you would have been out by then. But the other way of doing it, as I say, is to use the mid line that you're using, the 9 period, as a get out, and we'll show you. So there's 3 or 4 different twists on this system if you wanted to just let the trade run. Okay. What I haven't mentioned on this is that this, as we open this, our stop loss is here, down here. So with this, when you got the trend opening and running, you could simply apply a trailing stop loss below the close of the previous candle that you got in, or below the second candle after you got in. So if you got in here, the stop loss would be here. So if we got in there, stop loss would be back down here. See, we might have been taken out on that one. Okay, that's the way to do that as well. Or simply apply a trailing stop loss to it as well. Now, I'm not going to go into trailing stop losses today, but there's a webinar last week, I think Otto did, or the week before, on trailing stop losses. Oh, well, but that's another technique to actually use to apply it as well. Okay, whatever system you apply or whatever technique you use, you've got to be comfortable that you're comfortable with understanding how it works and the pros and cons of each and every system you approach. As I say, this system was originally designed as a very simple in and out, simple rules. The crossing EMA, use the ATR as a target and get out when the target gets hit. If you wanted to run it more and take more out of the trend without having to use multiple trades, what I'm saying is perhaps use the midpoint, the 9 period EMA, the midline, as your when the candle breaks back below it, to get out there. Or second stage is to just keep re-entering following the same rules. So are we still in trend? Well, yes we are, because the trends is still moving up. So we re-enter again. ATR, whatever it was at this time, is different, so we add again, so we use multiple trend. So this way we follow the trend up. We take 3 or 4 trades to get to, or 2 or 3 trades to get to this level. Here we've entered here, and we're just letting it run until we break back down through the blue line. So we just got 1 trade, and we've let it run for many, 5, 6, 7, 8, 9 hours there. Here we would have had 1, 2, or 3 trades, and probably have got out as it's breached the 200 period. Okay, so there's different ways of trend trading, and you find a way that works for you, that fits your approach. So if you can't watch it all the time, just set it stop loss when we break back through the midpoint at 9 EMA. Okay. Any questions so far? It's all very quiet out there again. It must be getting a bit rusty. So this is basically how I set the charts up. And these are very simply the colours I use, and again you can use the colours you want and what is on the chart. So basically these are so we're looking for trends, okay? So the trend, oscillators, fractals, the little headings that are on there, and the pivot point is also in the chart, okay? So these are the colours that I use, and you'll see what the charts look like in a minute, okay? So any questions? I wasn't going to go in part one of this. I went through actually setting up the chart itself, but watch the previous part one say watch part one if you want to see actually physically how to set it up. I wasn't actually going to go through that today. I was going to just look at some more. But this is the indicators on the actual systems and the setup. But I say watch part one if you want to see the actual setup. What I was going to do today was actually bring in some of the live charts. So let me just run through that again. So this is the. Hopefully you can see that. Oh, it's not. The recording's not. Can't see everything. Oh, it's because I've got the site wrong. So let me just bring that up. Okay, so hopefully you can see most of this. All the recordings. The image, this page has gone off. I think. Let me just. Oh dear. Let's just try and make that fit a wee bit better. It's come off the screen, hasn't it? There we go. Okay, hopefully you can see all that. Right, sorry, it's just some questions come in here. Jeremiah says, which of the lines is 9 period and which is the 5 period? Well, let's zoom this up, Jeremiah. Let's just go back. So here, let's just have a look at the setup. So here, so actually a bit. So it's just the amount of the colours you use, Jeremiah. So here on this one, the 5 is the blue, and the yellow is the is the 9. Abos is asking, should we only trade when risk reward is above 2? No, Abos, what I'm saying is that this works because this system triggers and works quite well. You don't have to use risk reward of 2. Lots of people say don't trade unless it's a risk reward of greater than 2 or 3. What I'm saying is, in my experience, risk reward of 1, 1.2, 1.5 works quite well, and it triggers and it's good enough. I'm not saying do that because obviously logically it doesn't make sense as a new trader. But you'll for me it works effectively 1.5, 1.2, and sometimes a lot of the times less than 1. We'll have to look at that in some charts as well. Direct dollar yen day 1 day ATR 15.6954 because it's a yen pair. Is the target then 69 pips? Direct, yes. We'll come. I'll go through all that in a minute as well if you want to go through that. Name of the hot forex pivot indicator and from where to download it. Abesh, thanks. Okay, Abesh, the pivot is in the right. Okay, so some of you haven't obviously watched the first part of this. Let me just go back then. Let's just go back to how to set this up. So let's do a new chart then. Right, okay, so let's start a completely new chart. Okay, so this is dollar Swiss on the 1 hour. Let's take it to the words. My template is I wasn't going to do this today, but as some of you have asked. Yes, you'll get a copy of this webinar, Oshin, don't worry about that. So let's if you go, let's answer the pivot at Besh's. If you go to the your Navigator console. Okay, Navigator console. Click on Navigator. You should have, if you've got the latest version of the MT4 platform, you should have these Hot 4X EAs here. I think you need about, I think you need about $200 in your account to get this. It's the Premier Trading Tools. These ones down here, and this package here. These pivot points come with it. The pivot points are desperate, to be honest, Abhinesh, but they help a little bit. So don't worry if you haven't actually got them. But basically, you click on that, and double click on the pivot, and it should just, and then you literally insert it into the chart, which it has done there. But it's on the daily one, you can't see that. Okay, so and it's there. If we zoom in a bit, you can see it a wee bit better there. Let's take the grid line off. So there's the pivot points inserted. Okay. So I say, if you want to say, this isn't actually setting up the charts there. So I'll just go through. Oh, it doesn't fit very well, does it? So let's just go through. Actually, let's just, an example before was gold, which is a good example. Okay, so hopefully you can see all that. So let me just run through this again slowly. I'll say watch part one if you want to go look at setting up the chart. So the green lines here are the Bollinger Band set at 20 and 2.5. The main moving averages are the yellow and the blue lines, these crossing moving averages. So here, let's just go back to what we just did, or I just did earlier today. So here, we had this big white candle here. So we had the blue candle here, the blue EMA here, the 5 period, crossing over the yellow moving average, and it also closed above the midpoint of the Bollinger Bands. Fractals are here. These are the Bollinger Bands. RSI set at 14 and the ATR set at 14. So here at 9 o'clock this morning, gold triggered. It went long. Okay, so it's gone long. It's gone through. EMAs have crossed. We're over the midpoint of the Bollinger Band. The entry was there at 126.39. At that time, the ATR down here was 1.8. So 1.8 plus 126.39 was taking us to 128.19, which it didn't do in the first hour. Look, got quite close to it in the first hour. It didn't do it. Within 2 or 3 hours, it did do it. So this is an example of the stage 1 system. Okay. So here we've got that's run up there, and again the stop loss would have been down here. Again, the pivot has helped me because it's saying, oh well, it's likely to get back to the pivot, so I'll put the stop loss down here. So again, you can see the risk reward ratio is less than 1 on this case, but because it's triggered with a big candle, because it's that first hour in the morning, it looks to be fairly positive. It's gobbled up all the overnight session. I was comfortable with the probability of it getting there was quite high enough for me. So off that's run, and that's closed out. So that's closed out. So I wouldn't have an open trade on this if I'd traded this the part 1 way. Okay, if we'd looked at this all right, well let's trade this as a trailing stop loss, as a running trade, because we think this is a big candle. It looks like it's going to go. So we open it here and we keep it open until, as I say, there's 2 or 3 rules, until we break this, until we come back to break the first rule would be the breaking of the 9 period moving average. That's to get out. But on an intraday basis, obviously we'd put this in. Our first target, or a question might have been here at this resistance level, but clearly that would have been a closeout as well, the 200 period. So there could have been 2 other targets as well to let this run up to. So again, that would have been, you just let that run. Okay. If you want to be really conservative, you could just so you've opened it here at 9 o'clock, and you're not going to close it till it retraces back to the midpoint of the Bollinger Band, and the midpoint of the Bollinger Band, the mid moving average, which is the 9 period. Okay. That's one way of doing it. So this part 2, depending on how you want to run it, how far you want to run the risk. Okay. Abesh, thank you very much for your comments. Sorry, I was just reading that. So this is a good example of when a trend's run, but this is, this is what has happened this morning. And so let me just go through these two ways of approaching this running trend. So this is rule one. So one, we got in here, target was there. So if you wanting to just try and be quite conservative with this, look, we've ran up to, and we've stopped where we stopped yesterday. So you might start panicking, think, oh, it's not going to go any higher than that. There's a resistance there. There's a pivot point there, and we're already at this high. I'm going to bag my profit, so I'm happy with my whatever it was, $1.8 on this gold trade. That's fine, but the next what you would do then, or if I've been trading this morning, what I would have done then, I would then I know it's easy to say this now looking back, but I was comfortable enough, the probability is high enough for me to then re-enter again here at 12 o'clock when we'd hit target during this candle. What's happening at the end of this hour? Well, let's have another look. Well, I would have entered there 128, 1288. Again, follow the rules of the ATR. It's 1.75 or so, whatever that was from there. Take that up to there. But again, you see, it might have run into this key 200 period moving average. So that's the second way. So there you would have had two trades. You've had two costs of trades. You've had to open it and close it. With this one, it's still open. I would have probably looked at that and I thought, well, all right, well, target one might have been here and target two there, or if we'd got to there, are we still looking to long? Well, by the time if that had been my target, the resistance one, my target two would have been, clearly 200 period. It's going to run into the 200 period because there's a big strong resistance level at some point. There isn't enough value in that now. Once that candle's closed, it's only got that far to go, and it's already run through it once already, but that's still looking quite strong. The beauty of trading, of closing out when it retraces back to the 9 period on the mid moving average that you're using, is that you're just still in. We've opened here at 9 and we're still in. The downside is if we get a big sharp, you end up losing. We've ran all the way up to there, but you could end up losing. This could now spike. As this goes up, it could spike back down here, so you lose all that gain in pips, and that's the argument. But it's perhaps a bit less stressful because you've just got one trade on, you're just letting it run, letting the move run, and this works. So again, it's different approaches. So there's the standard setup where you just take the ATR and then add another trend and another trade if the trend is still running. If it's turned around, obviously you're in and out and looking for something else. Abhishek, what you Donna, I know I need to run off now. Can you still include me in this link? Yes, anybody that's here will get an email for a link to the recording once it's finished. Donna, don't worry about that. Can we have an example for a script trending down? Is there a way to catch early downtrend signals with the help of EMA and bang? Because we never know what is the top. Like you said, I trade the rejection of a particular EMA. I'm not sure what you mean, Abesh, but basically it's the same. So what I do, or what you should do, is follow the rules. Let's just get rid of that one. So here, for instance, if you're trading the 1 hour system, you've got, obviously with a 1 hour system, sorry, this isn't the whole screen isn't on here. You need to be trading, if you're only trading a 1 hour system, the spread is important. So the spread is the cost of you trading. So you've got to bear that in mind. So you want to be trading currencies that are only have a very tight spread. So the main, like euro dollar, euro yen, euro pound, these ones here, these sort of 5 or 6, I've got 12 on here, but some of them the spreads are a bit wider. But the key euro ones and the key dollar ones, okay. But the system's the same. So here, if we look at the yen this morning, this would have been a short one, Abhishek, here. If we zoom in a bit. So here we see we've got so what's happened? So you come in on a morning, whatever trade, so it's a bit messy, it's not very clear. So that looked like it was going to go up, but it hadn't. So we'd crossed there, hadn't we? This is a good example. Because you've got to be patient and wait for the rules. So here, at whatever time this was 25th, this was 9 o'clock, again 9 o'clock this morning. It had crossed, but we hadn't broken below the midpoint of the Bollinger Band. Lots of people would have jumped in there and it looked quite negative, but strictly the rules hadn't been kept. Yes, the EMAs had crossed, but we hadn't broken below the midpoint in the Bollinger Band. We'd closed below the pivot point as well, which is quite positive. So you should have strictly waited to enter there. So on this particular example, the entry would have been there, okay, because we'd crossed there, but we didn't break through the Bollinger Band until the next one. So we've entered on this one here, and again our stop loss would have been above the turn. So the turn was round about here, wasn't it, above these other candles here. So our stop loss should be up there somewhere, but certainly above the top of these candles. Okay, so we've entered there. This is dollar yen this morning. So and again the ATR at this point is it was 0.97, so about 10 pips off. Is that right? Yeah, 10 pips off there. So we're 11.15. So 11, say 11.5 for the sake, and we've probably just run into that now. We're at 11. Actually, you can't see that, can you? Because it's on the chart. Oh dear. I've got my screen settings all right. I apologise about that. Let me just bring this over for you. Let's shrink that down there. Sorry. Right, you can all see that now, can't you? So let's me just reiterate. So this yellow line would have been the stop loss, or somewhere up there like that. This would have been the entry. ATR is down here at 0.097. Hopefully you can see that. So it went against us. We were out the money. Look at that. We got in there and we were out the money all the way up here. So if you'd been watching this and sitting on it, you'd been probably panicking, because that's a big loss, isn't it? That's a big loss. Remember, we're only looking to get to about here, where we are now. We've only just got to target. But that's what trading's all about. So it went against you. It went back over the midpoint of the Bollinger Band, but the other Bollinger Band hadn't crossed again, had they? So we're still short. So that was just a retrace from our entry, and that was because this big move down was stalled here, and now we've got entry. We got entered there, and we've run off. So again, interestingly, if we'd had our stop loss where we recrossed we were using the second period, no, I'm talking about the stop loss is still there in the first one. Sorry, ignore what I was about to say there. So our stop loss initially is there when we open it. So we've run off to target. Okay. So the question now means, is this still valid? Well, yes, it is. I don't know what time it is now. This candle obviously isn't closed. It's still 20 minutes before this candle's closed, but we've ran to our target. So at the moment, this is looking like a second entry on the close of this hour, following the rules, simply because the moving averages are now pointing down. The 20's pointed down. We're under there. What's happening? Well, look at this. We're coming to this key level here. So if this of 1100, so depending on where this candle closes, if there's enough distance to see, it's only 6 pips from back to this psychological 111. So next support is down here at 1092. But what's the ATR? Well, the ATR, is there enough risk reward in this to take? Sorry, I didn't mean to do that. I meant to do that. So the ATR is what? It's 11 pips now. So we've closed our first trade, and we're maybe looking to get in again at the end of now. But again, you've got to wait, because this is a 1 hour system. Wait till it's finished, and then decide at the top of the hour. So that's why patience and discipline come in. Again, though, if you were trading this is just trailing as your stop loss here now, midpoint of the moving average would have already been taken out of this one, because it rejected very, very quickly, didn't it? Because our stop loss, and that's your stop loss is too close. That's why when you're trend trading, you need to look where the turn in the market is, and the turn in the market is all the way back up here. So at a minimum, your stop loss needs to be up here. And again, if you'd had it as close to the top of these candles as that, you would have been spiked out with that one, and it wouldn't have worked. You would have needed sort of a bit higher, and you would have still been in this trade, and it's running. So that's still running down. Abhishek, got it. I would trade if the point of spike can happen any time. Thanks. I was missing Bollinger Band part and trade 30 minutes. Great. Yep. Yeah, it works quite well in 30 minutes as well. Again, use the time frames that work for you, that fit for you. It doesn't work. Obviously, trends go up and down, but the higher the time frame, the stronger the trend. So it's worth knowing what's going on. Now I'll flip up to the 4-hour time frames in a minute. Last question: could you please explain how to trade the ATR? Just basic salient points, if possible, in this session. This would be my last question, Abhishek. Certainly, all the ATR is, Abhishek, is what it says. ATR stands for the average true range. What does that mean? Well, it means and it's set at 14. So what it does, it looks at the last 14 candles going back. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So it averages out. So it adds up the distance that this has travelled. And also the beauty of the ATR is it takes in any gaps in the market. So it gobbles up the whole price action. So it's purely price action. So pure price action. The average range that this thing has moved, this particular asset, which happens to be the dollar yen, over the last 14 periods is now 10.6 pips. That's what that's saying there. Can you see that? That says 11. Well, let's call it there. That's what that blue line is plotting. And that's all. So what you do, the beauty of the ATR, and again, I know many traders that use the ATR as a stop loss as well as a target. So you've got probability on your side again, because you're using what's happened in the past time frames to project what might happen in the future. And that's all technical analysis can do for you. Okay. Obviously, when you're trading intraday, these 1-hour time frames, you need to be aware, obviously, clearly, and I'll come on to that, of big news items. There aren't any particular big news items today, so you don't get some great big volatilities in the charts. So you just got to be aware of that as well when you're trading, and obviously always have the economic calendar out. So obviously the big news items, for instance, typically 3:30 on our time frames here on the server time frames, when the big news comes out of the US, when the economic data tends to be issued. Similarly, it tends to be sort of 11 o'clock, 9 o'clock London time, tends to be 11 o'clock server time when some big news tends to come out, or 12 o'clock server time when big news comes out for the European session. So obviously intraday traders, you need to be aware of that as well. So if you're trading this with the 1-hour time frame or the 30-minute time frame, obviously you've got to be careful of the spread on whatever assets you're using. The beauty of this system when you go up a time frame, say to the 4-hour time frame, is that you could, I didn't mean to do that, did I? No. Is that you can, if I bring in my 4-hour, you can bring in much more assets. So the assets with the trend just as well as the popular assets like euro dollar and euro yen and gold, things like Swiss, the Swiss franc and the Canadian dollar against the Swiss franc. Sometimes these lesser traded assets that with the bigger spread, but because you're looking at a 4-hour time frame, you can add that they become, because the targets and the stop losses are so much bigger on a higher time frame, you can add these trends become quite significant as well. So here, I don't know what's there's an example of one here on the Aussie on the 4-hour. If we zoom in, so again here, similar here. Hopefully you can see this quite clear. So very choppy action here, Aussie dollar. Trigger here, whatever time this was. This is 4 o'clock on the 23rd. That would have given a short position, and so you follow similar sort of following exactly the same rules, but with the beauty obviously of the 4-hour time frame, it might fit more appropriately to your day-to-day activities. So it means you only need to literally look at the chart 6 times in 24 hours. Obviously some of those hours you're going to be asleep, so 5 times a day. You might be able to fit it into the rest of your time frame. Obviously makes the target. So again here, let's just do this then. So here that's triggered there. The ATR here is I don't know if it's whatever that is, 0030. So what's that? Will take us to, so it's 07381. So that should take us to 51, wherever 51 is. That hasn't played out, has it? So 51. So 51 is down here. No, that one's just missed. So that looks like that would have turned. Yeah, that would have been stopped out on that one. That one wouldn't have worked for us. So you can see the principles today. So ATR there. Let's just do that again. So ATR on this one. let's double check that one. So 0, 0, 30. So 0, 0, 0, yeah, that should be even lower than that, wouldn't it? Object list. It should have been. Well, that was sort of 51, wasn't it? So it's an example of, you know, when it doesn't work. So again, so 30 pips there, but our stop loss again, technically, again, because it's been very choppy though, see, so the entry would have been, should have been questioning in it. You know, back over the 200 period, now we'd gone close to target, turned around, and it hasn't worked. But that's triggered back the other way now. So it's thinking, that's enough. Is that enough to get me out? Would I still be short? Well, I'm still short, but it's gone long. So although my stop loss would have been back up here, by the time this candle's closed here, I'd have closed it because we've turned around quite aggressive. We've gone back the other direction, and we would have gone long. You could have gone long then, or closed your short position just for, you know, take your loss there. Is that going to, well, possibly, but you can see, well, this isn't really trending, is it? It's bouncing up and down, but do I take it? Well, possibly, yeah. Where's it going to go? Well, it's probably going to go to the 200 period because that's quite often what happens. So it would have been, hey, again, you could have taken a, what's the ATR telling as well? 74.12 at the end of this hour, and that's about, you know, 25 from there. So what's that? 74.13 takes us to 30. Yeah, that would have taken us back to this around here where our previous stop loss was, just above the 200 period. So we've got some of our losses back on that one. And then it would have still looked like it would still keep going, but it's chopped around again here on the 4 hour. So again, it's, you know, as with any strategy, it doesn't work all the time. That's the whole thing. But Siri, sorry, direct what you say. Risk management question. If I risk 1% of my account per trade, should I also limit myself to a maximum of open trades? Yeah, direct, absolutely, yes. So don't try and take everything, okay? Or if you have, say you've got 5 or 6 trades open, and you see 3 or 4 other things trigger all at once, and it will take you over the sort of 10% open. Just reduce your exposure on those, you know, the 8th, 9th, and 10th, or 12th, 13th, 14th, 15th trade. If you want to take them all, just reduce that amount. But if it means that you can't take the trades because you've already got trades that are open, you just, you know, that's just part of trading. That's what it's all about. It's all about managing your margin. It's all about managing your account size. But if you see this a system that's working for you, and you see trades triggering at you, write them all down, and then think, well, actually, so do I need a bigger account to be able to take all these other trades? Because it's all about capital. It's all about protecting what you've got. Or do I reduce the size of each trade when I'm opening them so I can take more trades? It's all about your approach. It's all about, as I say all the time, it's all about you. Because what you will find, and over time, you will instinctively, when you analyse all this, sometimes some people feel much more comfortable about taking long positions compared to short positions. Some people feel much more comfortable about trading gold compared to trading the yen, or don't trade the Swiss franc because they've had a bad thing about it. And it's these mind games that whatever system, whatever strategy you have, whether it's an automated system or you're trading manually, these are the mind games that you constantly have. Okay, and so by writing everything down and having some rules and sticking to the rules, it makes a lot of those mind games not go away, but it makes it easier to deal with. But Siri, using the strategy you are teaching us about the RSI is relevant. Fair comment. The RSI, it's just there as a quick eyeball. What's it doing? Is it going up? Is it going down? Is it doing anything? The RSI is typically used, to be honest, in my higher time frame setup. So I'm just being a bit lazy by just leaving it on. Just seeing if there's any real overexposure. Just really, all the oscillators on the RSI here is looking to see if we are significantly overbought or oversold. So if we're significantly over 70 or significantly over 30, that would make me question actually taking the trade. But most of the time, you're absolutely right. RSI, it's just there. It's on the chart. It's not something that really makes my makes my decision making. It's all about this particular strategy. It's all about the moving averages, the crossing moving average, and then the mid break of the midpoint of the Bollinger Band. Can you? Oh, of course I can. Let me just bring the slide. Let me just bring that slide back up for those of you that have not seen that. Oh, this one here. So this is the setup, and these are the colours that I use. So we're looking at trends, the oscillators here, the fractals, and the pivot point. So 5 EMA, the 9 EMA, the 200 EMA, the Bollinger Band set at 20 and 2.5. That's that 2. The standard setting on the MT4 and many platforms is 2, so it doesn't really matter. It's just I've always had it set at 2.5. That's not really that relevant because it's the outside line. It's the mid line that's the key one. Say RSI, as I say, is just there as an eyeball. The ATR is the key one. So the three key things for this system is the 5 and the 9 EMA, the midline of the Bollinger Band, and if you didn't want to put the Bollinger Band on, you could just put a simple 20 period moving average on, or a 20 EMA as well if you didn't want to put the Bollinger Bands. It's just I've always used the Bollinger Bands and the ATR. The others are just nice background stuff for me. The problem is if you put too many of these other things on, like fractals and pivots, and if I had a stochastic on there, you end up sometimes with analysis paralysis, as many people say. Too much information sometimes that stops you doing it. So something that becomes simple can very quickly become too complicated. You have too many indicators on. You can't have something that's too simple, i.e. too few indicators, just trends and no oscillators, or because you'll get whipsawed in and out too. You get so many false signals and it ended up not working over time. Okay, hope that's answered your question. Okay, so as I say, my background is trend trading, and I've lost. Where have they gone? I've lost my. Oh dear. There we go. I've lost the MT4. Here we go. It's here. Right, grab it. Let me grab it and bring it. There we are. So again, so let me just reiterate: if you're going to trade down at the 1 hour time frames, no, I'm trying to. It's because it doesn't. Sorry, it doesn't fit the screen at the moment. There we go. Because I've got the screen size set strangely on my screen for some reason. So it's all about trading the time frames that fit you. So I say this was not developed, but I first started using this on this 1 hour system. So the 1 hour system, the spread is key. Okay. Can you overlist with Heiken Ashi? I'm going to do Heiken Ashi next month, Osimo, and I tend to use Heiken Ashi as a standalone system down at the shorter time frames. But you can, but the issue is it might end up being a bit too complicated, too much stuff on your screens. Okay. Have a different strategy. As I say, if I'm going to trade, if I'm going to scalp, I like Heiken Ashi down at those 5 and 15 minute time frames. You can, but it's really up to you. What works. Not something I've done, to be honest. So 1 hour and 4 hour, it works very well, and again even up on the daily time frames as well. So if we can, if you want to, I haven't got this on a daily time frame, have we can change it up, and again let's just, which one's been, let's have a look at this gold one. Gold's a good example. So this is the 1 hour. If we flick it up to the daily, you can very, very clearly see where I entered a really big short on gold back in June, and it was simply this big candle here, taking out all of this, and this system, let the trend be your friend. So that's just, we've just added to this position, or you can simply add to this position as it's gone down and down and down. Obviously, again here, if we zoom in a bit, this is a good example. So you'd entered here, so the trend, obviously the turn is really all the way back up here, but on this particular one, although it's such a big candle, it was back up there, that's a stop loss. The ATR was whatever that was, 11, 12, $10 at the time, and we've just moved that down. as first ATR, but again you can see it's retraced. So we again, two different approaches to this one. Just a good example of how to approach. So the initial ATR was about $10 or $12 on this one, wasn't it? Yeah, $10 from whatever, it was 10.90 down all the way to 10.80. So you'd have trailed this down to initially it was only about here, wasn't it? But if you'd used the midpoint, this mid 9 period EMA as your stop loss, just stay in it until it gets hit, you would have taken it all the way back down to here. So the close was 12.56. So the initial approach, the ATR when that big thing happened was only $10. So we got in at here at 12.90. I think it was, wasn't it? Break of 12.80 would have taken $10, taken us down to 12.70, which was about here initially. A big move. So and then re-enter because we're still very much with the trend. Or you could have just left that trade open until we retrace back to the 8 period and we've got about out here. Are we still short? Well, yeah, but we're not sideways. So again, if you close that one out, another significant entry would have been here on the 11th as we've gone down again, down to this key level here, which was 12.40 if I remember right. That's right, when I was away. And then we've stepped down again. So the longer term time frame, as you can see, was very much still down. There's no maybe a floor following here in oil, but that's really how to trade this one. Right, so we're nearly out of time, but it's got some questions coming in here. Great big long one here. It's really long. The beauty of this EMA trade is that if we see the current chart, it is getting rejected from the red 200 period. Yes, 200 period is very, very strong. You're absolutely right. And if it continues, then it may cross or finally slide. My EMA. All right, okay. You've got a different. You've got a bit of a twist on this one, Abhishek, I think. Is that we see the current, and if it continues, my golden rule is if. Do you mind if I read this out? I'm sure you've written this, Kumar. You've written this down, I suppose you do. If it continues, my golden rule is after it is above the 6 EMA and the 6 EMA has crossed the 9 EMA or the 13 EMA in my case, I never quit. Like you said, I keep my stop loss 2 candles below. My great learning today was Bollinger Band midpoint and ATR. I trade forex, commodities, and international markets. Commodity, it has been tested for me, but I am new to forex, so going to apply on some major pairs during my next 3 trading sessions. Maybe in next seminar, if you could throw some light on spreads and pips and calculation. I get confused in pips and pipettes. Also some. All right, okay. So I'll drop you an email. Actually, it's a great big long question now. I won't answer all of that. What is the spread on gold, Stuart, and can it be traded on a small account I got in? Typically, it's about 4. Well, let's have a look. Let's just stick this up. It's about 4. It's quite wide, isn't it? It's 10. That's 10. That's 14. 40. So here. So let's. Can you see that? Is that actually on the screen? Right. So here at the moment, gold here on this this demo account here, we're at 81. So it's fair old spread though. So it's 40 pips there. So it's moving around quite a bit. Obviously, the key is to trade the lot size that is appropriate for your account. So the smaller the account, the smaller the lot size, basically. And again, you can change the lot size, then go all the way down to 0.0001, and that's where you should be starting with a small account. You really should be starting all the way down at minimum lot size. Okay, no problem, Patricia. So that's gold. Obviously, the other thing with gold, remember, it's quite a volatile commodity. This is obviously on the daily chart. It's quite a volatile commodity, and it's traded at the cent level as well. So pip wise, it can move very aggressively. So make sure you understand the size of the trade that you're taking with any particular asset that you're using. Okay, so gold's a case in point because it's traded at 100 level, not 1,000. So let me just finish off with unfortunately our so this is what I was talking about if you're going to trade in 1 hour, make sure you trade the tight spreads. Be aware of liquidity, session change, and key news release when you're trading intraday, especially the 1 hour time frame. So obviously you can see, this is liquidity volumes, big volumes when New York and London are open. The overnight sets, London closed at 6 o'clock and everything quietens down quite significantly. So even the afternoon session in New York, volume wise, is very, very insignificant compared to excuse me, compared to the London New York morning, London afternoon session. Obviously the Asian session very, very quiet as well. So this is when we get some crazy spikes sometimes at midnight, as the markets are closing, server time, and very as you know, New York's closing a bit. There's not a gap, but there's, from the cash markets, certainly the forex markets, there isn't a gap, but the cash markets, there is a wee bit of an overlap. But there's a very, very quiet session here as the Australians wake up, New Zealanders wake up before Tokyo comes on an hour later. So obviously be well aware of that. So tomorrow it's all about emotional control. Tomorrow's webinar. The August webinars aren't actually up on the. I thought they would be today, but they're not actually up on our website yet. But there will be. I can't remember what we're doing for August at the moment. We booked them ages ago. And more live analysis next Tuesday, the last day of the month. So thank you for your time, everybody. Any final questions about anything? And I'm trying to find my book list. Many of you have seen this many times before. I won't leave you with that, but do send me a sort of an email at sorry, I've put obviously an old slide, this one. If you've got any questions, email us at support@hotforex.com and they'll pass it on to me, or webinars@hotforex.com. Our analysis is always up on the analysis page, and please keep in touch. We're here to help. Okay, thank you everybody. Any final questions before I go? I'm only 10 minutes over. No, I'm only 5 minutes over. It's not like me. No. 1, 2, 3. No. Thank you. Thank you for your kind comments. We'll see you all again on. Well, I'll see you all again on Tuesday, and do join Otto tomorrow. Okay. Take care. Bye bye.